Alrighty, we are on. We are live. All right. What up, everyone? Welcome back. Welcome to Financial Education and Business. Um, I'm going to be talking about Kraken Robotics. Um, there's this really good company review done by this individual here, Red Bean Field Bread Man tweets are ideas and opinions, not investment advice. But he actually is one of the earlier investors in a company like ASD, and so obviously, his research in small market caps is sometimes kind of important to look at. So, anyways, he posted this research, his thesis around Kraken. So I wanted to just go over it, check it out, and go from there. Let me just make sure, but that I'm all connected and I can just go start the review process. Okay. Cool. So, so it looks like he did his own analysis of the company. He recently heard of it, and it looks like the first time he heard about it was, let me see, uh, he did Kraken, oops, uh, crack, KRKNF. Um, let's see. It looks like he found about Kraken, October 24th. That's quite recently. He posted this article here, and then he posted this October 25th saying, "Great summary. Trump supporting AUKUS was like reason for big move in Kraken midweek." So obviously we had on 1021 that shares are up 20% as Donald Trump, or the president, signed his support for AUKUS, a trilateral security partnership between Australia, UK, and US, moving that could be beneficial for the company. This company has mandated this AUKUS has mandated related to the underwater drone delivery. Kraken product produces the batteries that are exclusively used in the underwater drone made by Anduril Industries, according to Scotia Bank analyst Kevin. So that was one of the reasons that it had to run. And then 8 hours ago, then a little bit ago, 8 hours ago, he posted this here. His investment thesis around Kraken, but he says, in summary, Kraken Robotics is a unique investment opportunity with a rare combination of strong execution, outsized growth, and high profitable exposure to rapidly growing market of defense underwater unmanned vehicles, while trading at a significant discount to peer like AVAV and KTOS. Um, the re-rating potential can be achieved as awareness spreads among institutional investors, and the company uplists to shares to TSX and the Nasdaq. He says that he personally did not dive deep in particular into the company, but he appreciated some of the individuals that actually created a really awesome video on Kraken. And then he said that he's finally started position Kraken over the last several days. He says congratulations to one of the individuals that's been doing really gotten early and has been doing pretty good analysis on the company. And then he finally did his he gets into this a little bit more analysis here. It says number 4, in spite of limited institutional ownership or support, Kraken continues to execute his has continued execution has forced research estimates to be revised higher. Below, you can see the Bloomberg consensus revenue for 2026-27 continues to be revised higher, which was conversely driven strong stock performance 2027 2026 and 2025. So here is 2025 estimates, 2026 estimates, and 2027 estimates, and the stock is performing as much and meeting those estimates for 2027. 6, he says, since Kraken is smaller than its peers, is probably less profitable, right? Wrong. Kraken is significantly more profitable, underscoring the importance of its products to customers. For example, Kraken current enjoys a 55% gross margin and 23% EBITDA margin, expected to expand 28% in 2027. And while its peers, AVAV and KTOS, margin are significantly lower, and yet along with lower growth prospect, both these companies trade at a premium valuation as well. So there's their Kraken and its two competition gross margin. Here's Kraken at 49. Kraken 2025 estimates 55, while the other ones are in their 30s. And in their 30s, Kraken is still high estimates of gross margin at 50%. EBITDA still, right now 2024 was 100%, 23% 2025, 25 and 28. So high, very high growth company there. So he's just posted multiple videos, but the one that I'm really interested in seeing is his most recent research here. So I'll just go over this. So number 1, Kraken Robotics is highly profitable and rapidly growing supplier of platforms, batteries, and sensors for deep sea application in both military, 70%, and commercial, 30%. Markets with a significant re-rating potential to $8 to $12. Right now, Kraken is at $4. So it looks like 70% is in the military and 30% in commercial business. A living, and then obviously octopus or whatever that is, Kraken. 2, in the Bloomberg ownership summary below, you can see that Kraken has very limited institutional ownership in 2026, 26% of the current float, which means that most shares are held by retail. Also, 72% of the shares are held by Canadian investors. Why does this matter? For more highly valued drone defense name like Aviave, the competition can see that its institutional ownership is much broader, at 79%, and the U.S. investors account for about 87% of the ownership of the. This strikes difference in institutional ownership presents a big re-rating opportunity as Kraken takes steps to uplist 1 TSX Venture Exchange in the Toronto Exchange, and also OTC from OTC to the NASDAQ, with the goal of attracting more institutional ownership. So here we can see that the company Kraken Robotics, looking at the top geographical ownership, Canada, we got current, so we see that Canada, United States, unknown, Norway, a little bit. So most of it is in Canada, and he was saying, and as well, most of it is in here we can see most of it is in Canada, and most of it is in retail hands. That means institutions haven't stepped in, and maybe the stock will have a re-rating once institutions see the company and their partner. The stock is going to see that institutional demand, and which could create even a higher demand for the company. Here, you got AVAV. As you can see, 87% is in the United States, 5% UK and New Zealand, Hong Kong, Japan. The rest unknown: Canada, Norway, and Ireland. Are the rest of the breakdown of the ownership. But as you can see, most of it is in the United States. Investment advisor, because you can see it's 57%. And then on Kraken's perspective, investment advisors are 60%. Um, individuals at about 11%. Hedge funds are not really in it, and banks are not really in it either. Um, so let's go on. It says, this is Bloomberg. He says, looking at the top holders list, you can see that the institutional ownership is very, very, very limited, hence big valuation discount. So here is the Kraken Robotics institutional ownership. All holders, we're looking at about 306 million shares out there, out 28.5, float about 96.75%. And so we have how how our investment how our investment looks like has about is at 9%. Pender Fund Capital Management, they have about 7%. The rest are in the 2 or less percent of what the company holds. So overall, it looks like most of the holding is in between with that company. So let's go on to the next here. We also saw this just showing that the in, uh, in a in spite of limited institutional ownership or support, Kraken continued execution has forced research estimates to be revised higher. Below, you can see Bloomberg consensus revenue for 2026-27 continues to be revised higher year over year. So 2025 estimates, 2026 estimates, and as you can see, this is the 2027 purple line estimates. So this revenue estimate that they're expected to hit is continuously getting revised higher and higher by analysts. So that means that analysts are saying, you know what, this company is gonna, gain more and more revenue, so it keeps getting re-rated to new higher revenue estimates, thinking the company is gonna hit higher revenues. So how does Kraken compare to other defense drones manufacturers? While Kraken is significantly smaller than Aviave or KTOS, its year-over-year revenue growth is more robust in 2026-2027. So if we look here, this is Kraken from a revenue perspective, Kraken and its two competition. So 2024, Kraken did about $91 million. That there's no way that's 91,000. So this is obviously in millions. So 91 million, while its competition is doing 717 million and 1.2 billion dollars. Estimate going into the next year, that is about Kraken's doing end of 2025, we're looking at 124, 178, 263% revenue growth. But if there's demand and if its main partner goes public, Anduril, these numbers can totally be different, meaning they could be a lot higher than that we see right here. So its competition obviously makes a lot more money, but obviously Kraken is significantly smaller than those two, and retail holds, as we saw, that retail holds most of those shares, and hedge funds and institutions haven't stepped in at all, especially in the United States. And most of the shares are held mostly by Canadians. So year over year growth. From a growth perspective, Ave's competition is growing, quite significantly, but we're seeing this kind of slowdown, expected slowdown. Who knows what could actually happen? Obviously, a lot of demand can come into the industry, and these growth can definitely take off. But as you can see, Ave's some of the competition has decent growth, but Kraken, while it's still small, is keeping a strong as revenue year-over-year revenue growth estimates. So which is really good to see. So year-over-year revenue growth for 2026: Kraken 43 to 48, Ave 34 to 16, and Kratos 19 to 18. So Kratos is actually just dropping and the year-over-year revenue growth right here. Going into point number 6, since Kraken is smaller than its peers, is probably less profitable, right? Wrong. Kraken is significantly more profitable, underscoring the importance of its products to customers. For example, Kraken currently enjoys about 55% gross margin and 23% with EBITDA margin expected to expand to 28% 2027 estimates, while its competition's margins are significantly lower, and yet along with lower growth prospects, both of these companies trade at a premium compared to Kraken. So gross margin perspective, 2024, as you can see, Kraken was at the gross margin of 49%, while its competition was nowhere close. So expected to hit, end of 2025, a 55% gross margin, and then years after to keep up that 50 at least 50 plus percent growth margin growth throughout the year, while its competition is still kind of much lower than how Kraken gross margin is growing. And then EBITDA margin, Kraken 100% 2024, estimated 23% and by 2025, and then to remain around that 20, pushing almost 30% by 2027 estimates. But then, if there's demand in the industry, if we're seeing that countries like China and adversarial countries like Russia are building their submarines and UUVs, underwater unmanned drones, then obviously there's going to be a re-rating in the industry, and then we're going to see who's going to take ownership, who's going to win actually in the industry. The best part is Kraken is partnered up with probably one of the best innovators out there. Lucky, how do you say his name? The CEO of Anduril, Palmer Luckey. So most likely they're probably going to continue to expand that partnership. So their growth actually might expand even faster. Point number 7. So what about valuation? Kraken trades at a significantly discount to peers in terms of EBITDA, earning before interest, tax, depreciation, and amortization. That's what this means. And PE multiples. Kraken currently trades at about 33 x EBITDA and 54x EPS for 2026 estimates, versus Ave, which is about 53x EBITDA and 85x EPS in 2026 estimates, and then Kratos a 90x and then 120x EPS earnings per share. So this just means that compared to its peers, that Kraken is right now trading at a lower multiple. This looks kind of expensive, but if you're comparing it to the competition, it is not as expensive at all. Applying Ave and Kratos 2026 estimate multiples to Kraken gets you to the stock price in the ranges of $8 to $12 per share, representing a significant upside of 60 to 146% versus the current share price of $4.84. Obviously, it's down, so no longer that price. So, meaning your return will be even higher than what it is if you buy, higher than the 64 to 144 if you buy it now. Defense drone supply. So I don't know if I'm gonna go through all this EBITDA, PE. Maybe I'll go through this another time, but this kind of shows the Kraken Robotics stock price, $6 at each given revenue multiples, EBITDA multiples, and PE multiples, year-over-year revenue growth rates, and gives you what price the stock should be. I mean, $16, that's 52 week highs. That's about a 292% growth. If it does hit that, those are significant multiples here, estimated multiples by the end of 2025, and as well as EBITDA and the PEs. Once again, these are all promises, so you never really know. We don't know what's going to happen in a year. Trump can wake up tomorrow and feel some type of way, and the market could continue go in a completely different direction. So what can close the valuation discount? Number one, management taking concrete steps to uplist to TSX and Nasdaq will be a huge catalyst for making the stock more easily accessible. For example, many US and international investors can't trade OTC. I can trade OTC. I was able to buy the stock on Charles Schwab. The also another thing I want to point out is that management is during the last earning call, management has confirmed this. They said we're gonna make sure one of the goals that they have is that they want to get uplisted. So as long as the stock price stays over this $4 range for long enough, they're gonna be uplisted anyways. And so what does that mean? The stock is gonna be on Robinhood, it could be on SoFi, it's gonna be on these exchanges where a lot of retail investors are, and there's gonna be a lot more let's say hype, or a lot more investors looking at the stock and seeing the valuation there. And obviously there's about like 4 or 5 catalysts that that is a headwind, I guess, not a headwind, but backwind, whatever you want to call it, that is going to support the company in actually getting more investor eyeballs and institutional investors on it. So practically, yeah, getting uplisted off of the OTC, and then getting more US and international investors to start looking at the stock. So number two, continued execution and customer wins will make it increasingly difficult. Will what? Continued execution and customer wins will make it increasingly difficult for institutionals to ignore Kraken Robotics. There are very few high-growth defense drone plays that are highly profitable and have leveraged upside to major growth themes under unmanned underwater vehicles. I shared an article earlier how investors are clamoring to get exposure to Anduril. Anduril is obviously one of their Kraken's major partner here. They buy their batteries. Well, Kraken is probably one of the few liquid alternative to get exposure to Anduril. Kraken is key supplier to this company that also benefits from supplying other players, is highly profitable, and trades at the reasonable valuation. That's very true. Spreading awareness, whether it's participating in the institutional investor conference or appropriately engaging with retail investors, will go a long way in educating the potential investors on the unique investment opportunity here, one that has fundamental drives continued execution and customer wins, along with structural catalysts like uplisting to the Nasdaq and Toronto Stock Exchange. So here is the critical supplier for unmanned underwater drones. So you see all these companies here. Some are Russians, I believe, and then some is the Anduril, whatever it's called, Shark Head, or whatever they Anduril decided to call it here. Um, and obviously, Kraken sells to other nations outside of just the United States. Number 9, in summary, Kraken Robotics is a unique investment opportunity with a rare combination of strong execution, outsized growth, and highly profitable exposure to the rapidly growing market of defense unmanned underwater vehicles, while trading at a significantly discounted to peers like AV and KTOS. The re-rating potential can be achieved as awareness spreads among institutional investors. The company uplisting its shares to the Nasdaq and TSX. So he says, I purposely did not dive deep into the actual business of Kraken Robotics, as there are plenty of recent write-ups on videos about this business. Like many of you, I'll be tracking the company progress, and I will write more articles as the time comes. There is this video that is, honestly, if you haven't seen it, it's a good watch here. This individual breaks down the numbers, the demand that the industry has.
AI chips in space, but the ocean is where the next trillion-dollar technology race is happening.
Stop. All right. Uh, I was not trying to play that. So this video is really good. He kind of breaks it down, talks about what the company does and everything else. So if you want to let me know, I'll just drop the link in this chat, so you can see it. If you've seen it, no need. I'm not going to do that. I think one of the benefits is this. One thing that's confirmed is Palmer Luckey, the CEO of Anduril, has confirmed already. I've seen multiple interviews where he's like, yeah, we definitely want to go IPO. His mindset is a lot like the CEO of Palantir. I don't know why K's name starts with K or something. I don't know why I can't think of it right now. But um, what's his name? His mindset is very aggressive, America first, and I can see, especially in the type of like environment that we're in, an individual like that actually winning. So the CEO of Anduril multiple times has said, "Hey, we want to go IPO, and if Anduril goes IPO, then there's going to be significant demand, and a lot of investors, institutional investors, are going to read." The S1. S1 is the report companies have to provide to the SEC whenever they want to go IPO. So this is the prospectus. So what most companies do is they will go through the list and see list of all the partners. They're gonna notice that most of the batteries that go into the products that Andro makes is derived from a company called Kraken. And they're gonna see Kraken's undervalued versus its peers. Maybe it just arrived onto the major exchanges like TSX and the Nasdaq, and that's going to drive even more demand from an institutional investment perspective. So as May 2025, speculation is riff regarding the company's potential going IPO. This is Anduril. Practically, Anduril Industries specializes in developing advanced defense technology, including unmanned aerial vehicles, which we've seen that already. Practically, drones that fly along jets and kind of like scout up ahead before the jet actually has to get there, which is really cool. I've seen a couple of videos around that. And then an AI-powered command and control software. The command and control software, I think that's the helmet that warriors or military people in the military can wear. Where think of it like a video game where when you're looking through the glasses, you can see what everybody around you is looking, and it's directly connected to the satellites. So the satellite will look down, look at the enemy around you, it will mark them, and then through the goggles that's connected to the helmet, you're able to see where the enemy is, through walls, through buildings. It's pretty cool. This guy is very innovative. But then he also is developing these unmanned underwater drones as well. The company's flagship products, such as the Altius drone series and the Lotus AI platforms, have been integrated into modernizing the defense capabilities of the United States, because we need to catch up or stay up to what's going on, especially as China is developing all these different products um, um, around like their military. But at the end of the day, when was the last time China was even in any type of war? They have no war experience, so I'm not really worried too much. But we're seeing that, so the United States needs to keep up with those kind of changes in technology. So practically, financial growth valuation. Andro is not a small company. So August 24th, they secured about 1.5 billion in funding, elevating their valuation of to about 14 billion dollars. By February, they raised an additional 2.5 billion, potentially doubling its valuation to 28 billion dollars. They continue to grow. The company revenue reached approximately $1 billion in 2024. I'm sure since then they have seen even more demand for their products. They have integrated their partnership with the United States government. So Anduril's success is pretty attributed to its strategic collaboration and a defense contract. The U.S. Department of Defense engages in multiple contracts, including the development of the collaborative combat aircraft autonomous surveillance system and the Microsoft partnership, collaborating on the integration visual augmented system, which is that helmet thing that I was telling you about with the U.S. Army, a project valued at approximately $22 billion. That's just one project projected. A project projected to be valued at these prices. The crazy part about this guy that owns that kind of started Anduril, he actually created the Oculus glasses for Meta. And so practically, Meta Oculus Meta was practically known a couple years ago for only having that product. Yes, they're a Facebook company, but one of the only hardwares that they had was their Oculus glasses, the AR VR helmets. And so he literally helped Mark Zuckerberg come up with that industry, made it what it is, and then he ended up selling that and moving on, and then obviously jumping on and creating this company called Anduril. While the company has not officially filed for an IPO as of May 2025, statements from the company leadership, they said offering that the public offering is a matter of when and not if. So founder Palmer Luckey has indicated that the company is on path to become publicly traded, emphasizing the importance of timing and market conditions. Obviously, every IP that these two market conditions and timing are very important when it comes to going IPO. And right now the market condition honestly is there. The market is hot. Interest rates are going down. The government literally came out today and they said, "Hey, we're gonna lower." They lowered the FOMC was today. Jerome Powell came out and said reduced the Fed funds rate by 0.25% or 25 basis point, which is a good signal to where we're going. The only thing that's kind of a little sketchy in the economy right now is the unemployment numbers. But that doesn't matter, I think, at the end of the day, because there's going to be a lot of efficiency gain through AI. Maybe things will become even less expensive. Anyways, that's a side tangent. The broader market environment plays a critical role in Anduril's IPO timing. As of early 2025, US IPOs has declined, with proceeds down about 25%. Is Anduril IPO the next big thing? Most likely. Historical funding for DoD activity and project cost through uh, 2031. Here we are in 2025. We're seeing that projections are actually kind of high. Total budget and base budget. So the total budget and base budget is about at even right now. But we know that Trump is the kind of person that wants to double down on defense. America first, first in technology, in innovation, in AI. So all this, I think, probably is gonna happen sooner than later. Um, there's a massive opportunity in the defense tech, defense modernization, in the growing environment of AI, autonomous systems, and broader surveillance fueling demand. The U.S. Department of Defense and allied nations are shifting towards companies like Anduril that offer cutting-edge first software first defense solutions, explosive growth valuations, uh, elite backing and management. Yes, I think Anduril definitely has elite backing right now. So founded by, so right here it says founded by Palmer Luckey, creator of Oculus VR, acquired later by Meta. I think Mark Zuckerberg and Palmer Luckey, they butted head to head. So Palmer Luckey decided, I'm gonna go do something else. Backed by a massive VC like Founders Fund. That's Tom Lee. I don't know if you don't know Tom Lee. He runs an ETF that holds very innovative companies. Also, he is the co-chair of BMNR. That's the company that does like Ethereum ETFs. But once again, side tangent. Founder Fund and Andres Horowitz, with supports from the broader Silicon Valley, because this company is in California and they have strong leadership team with both tech and defense experience. High profile contracts with, especially with the US military and Microsoft, as well with the AR VR products. Low competition, high entry barrier. So right now there isn't really a company that is close to what Unreal does. Anduril really is at the peak of like innovation when it comes to new defense technologies. So, in conclusion, Anduril Industries stands at the pivotal junction with its innovative technology and strategic partnership, positioning it as the formidable force in the stock sector. So most likely we're gonna see Anduril go public. The fact that they are partnered up with the fact that they're partnered up with the government, that's gonna drive a lot of their growth, and in turn a lot of the evaluation and a lot of the valuations that go into the companies around them, like Kraken. So I think looking at this, looking at some of these valuations, looking at Kraken's competition, and then looking at Kraken's partners, I think definitely this company has a long potential to do well. Um, Looking from a revenue perspective, this is a company that's growing revenue. So this is the financial statement. So just gonna do a quick analysis here. 22, this company lost about 19%. Obviously this is the year of the COVID, right? So obviously the entire industry was bad. And then as you can see, the company is growing. There's a sign of slowdown. So let's look at things in a quarter over quarter. So let's look at 2023, and we will look at 2020. We'll look at 2023 and 2024 and 5. So this is a company that was growing 62, 65, 200, 170, almost 180, 66%, and just grew significantly in 2023. Going into 2024, continue to grow. Q3 of 2023 was not that hot at all. The company actually went negative. And then what do we see here? In the last couple of quarters, we in 2024 we saw the company slow down in their growth rate and revenue growth rate. So we went from 22 to 19 to 28 to 16. This again is not the full quarter yet. Wait, it is the full quarter. Yeah, this is the full quarter here. And then Q2 of 2025, again, they are back to their revenue growth. Quarter over quarter revenue growth seems kind of sporadic, but overall, when we're looking at the annualized growth, this company is growing, at a significant revenue growth rate. Cost of goods, cost of goods always kind of follows revenue. I mean, you're making more products, you have to hire more people, and then where you the amount of space you need to do a lot of these projects is going to be a lot more expensive because you have to have warehouses and everything else. And then gross profit, I mean, this is the crazy part of the fact that this company's positive gross profit is pretty impressive. Obviously, you have your general administration, research, development, and operational expenses here. It's normal. These are what most of the time these will always continue to climb along with revenue. As you grow, you add more into research development, finding ways to do more technology, especially for kind of a technology based company, specifically around the battery. This is a company that used to have an operating income of negative $4.45 million. $4.45 million, and then they're losing about a million, less than a million. Now they're positive. The fact the company's pretty small still, about about $1.48 billion, and they're growing. They're actually hitting positive operating income. Pretty impressive there. At a net income perspective, they were losing money. Now we're actually seeing that positive year over year, positive year over year net income, which is pretty impressive. One thing that I do not like is that the fact that they continue to issue more and more shares. This obviously is not good for shareholders. This is dilution. You own less of the pie. But something got realized is small companies raise money a lot of times by issuing shares and not buying them back. So potentially, these could be related to stock-based compensation, but I like how they went 20, 10, 9. They kind of slow it down. It's kind of sporadic, so it's hard to draw a good trajectory here. Since 2023, in trailing 12 month, you're seeing that the company is issuing more, significantly more and more shares. They slowed down here between 21 and 2022. Balance sheet perspective, let's see how they are from their liquidity perspective here. Total current assets line is here, and their liabilities here. So as you can see, in 2020, these are the COVID years. They had more assets than more current assets than they did the liabilities. And then going in later on into 2022, the end of 22, they're they're they ended up having more liabilities, but then they quickly flipped. So now they have way more assets, almost 5 times more assets than they do liabilities, which is a really good sign. Um, a really good sign because it just shows that if anything crazy happens, the company can divest any short-term assets. I mean, goodwill is, I always say, is BS. It's not anything real. These are more of like they buy something and they value that goodwill, maybe a company's name or brand as a goodwill. As an asset, I really don't believe in goodwill. But as you can see, their property, PP&E, property, plant, and equipment asset is growing, which you want that. They are building in Rhode Island right now. Um, they're also doing other intangible assets, which I hate intangible assets. Other intangible assets are other non-physical assets that provide future economic benefits. I don't like intangible assets. I like tangible assets that I can sell to cover any type of liquidation related problems. Um, from a you know long-term asset to long-term liability perspective, this company's clean. So these are some of the things I really do like looking at. Uh, let me go total liabilities here. As you can see, total liabilities is way less than total assets, which is perfect. Total shares, 16 million, and this number continues to grow. I mean, I would like to see this growth rate to slow down, but it is a small company. I get it. They need money to continue to raise the number of to raise money to continue operations, or maybe sometimes it's better to do stock-based compensation and save the cash for actual investment in the company. So yeah, so that's what I wanted to cover. The video ended up being 42 minutes. If you stayed to this long, that's freaking awesome. Make sure you leave a comment saying that you stayed here that whole time. If you like this video, make sure you subscribe. I'm going to be posting more and more videos around this, anything related to stocks. Kraken is one. I think the next company I'm going to look at is going to be PayPal, so you might stay tuned. Most likely, I really want to buy the company. Love what they do. Love that they're partnering up with like OpenAI and a whole bunch of Google and a whole bunch of other companies doing open a model MCP's model context protocol kind of payments using agents. So um, the fact that there's just a lot going on with PayPal. So I'll cover that in a different video. But thank you so much for joining me. Have a great day. Peace.